Welcome back to another Crypto Rolly tutorial. In this video, we will look at the stochastic and RSI, okay? These are going to be your momentum oscillators. The moving averages, Bollinger Bands, Ichimoku clouds, they are similar. And then the RSI and stochastics are similar, okay? We'll start with the stochastics. So to get your stochastic, you'll go to your indicators, you put in stochastic, click on the stochastic here, just the plain one. And when you get your stochastic, it will look something like this. You go to your settings here, and these are going to be my inputs on my stochastics: 14, 3, and 6. Okay? And you can change, the colors of them if you like, and other options like that. But this is most important. And you can adjust these as you see fit if something works better for you. All right? Basically, when you cross up, it's bullish. When you cross down, it's bearish. You want to look at multiple time frames because you can see on the daily, they're still coming down. But if you go into the 4-hour, they are crossed up currently. If you look in at the 1 hour, you can look for a hint here. So you have a cross up on the 1 hour. Usually they will cross first on the 1 hour and then move to the 2 hour, 3 hour, 4 hour, 12 hour daily. Bit of a lagging indicator. And also, the lower the time frame, the less important it is. So just because you have a cross up on the 1 hour doesn't mean all the rest will proceed, but it's a hint that it might happen that way, okay? But the larger the time frame, the stronger the cross. Personally, I really like the 12 hours. The 12 hours have caught really awesome moves in the past here. You can see this 12 hour caught this downside move here. Here. You even caught this little correction here, caught the dump up top here, and your cross ups are great here. You can see that one there. You can see that one there. Just because they get low doesn't mean they have to immediately cross. You can see when it's super trending, they'll just remain low. Or you can see here we had a little dip and got picked back up, and then another attempt up here. Okay, if you go back to some bullish action in 2019, you can see where they just remained at the top as well. Something that's important with the stochastics, I like to say also, is when we are bullish, the cross ups from the bottom are very strong. When we're bullish across down, isn't as strong. You can see they'll get picked back up, or they just remain at the top here. And then vice versa. When you're bearish, across down from the top, okay, is a strong signal, but across up from the bottom in a bearish trend is not a strong signal. It can just float along the bottom here. Okay, that's your stochastics. The RSI, you just go to your indicators, type in RSI, go to the relative strength index. And I like that it says relative strength index right off the bat, because the one thing with RSI is most people just look at this as overbought and oversold. And that can be the case. Often, when you get above the 70, it's considered overbought, and sometimes a correction is going to come soon. Or if it's below 30, it's going to be a oversold, and you might also see a correction, okay? But at the same time, it's relative strength index. So when the RSI is in the bullish region, the bulls have the strength, okay? And when it's down low here in the bearish region, the bears have the strength. When we're in trending moves, you can stay up in the bullish region for a while. And when you're bearish, you can stay down here for a while. So just the second that you enter, oversold doesn't mean, it's definitely going up immediately. No, it can continue trending farther down. This is the strength of the bulls and the bears. Looking at the settings on the RSI, I have a 14. It's pretty standard default settings, I'm pretty sure. And then the other thing with the RSI that we often look for, you can actually chart out the chart out the RSI. Like you can, on this move here, we had drawn a trend line up this way. You can draw trend lines, head and shoulder patterns, inverse head and shoulder patterns, all on the RSI. You can see you had a low, higher low, higher low, higher low. And then once this broke, we saw a change in trend, and that rally kind of came to an end, and we've seen a major correction since, okay? So you can draw trend lines here. And then the other thing that we talk about a lot on the RSI is bullish and bearish divergence. Let me see if I can find an example real quick. Okay, here's a perfect example. So you can see on the RSI, you had a low and then a higher low, but on price, you had a low and a lower low. So price was descending, but the RSI was ascending. That would be considered bullish divergence. Now the opposite up here, you can see, let's find an example. Okay, yeah. So you had this top here, and then you had a top here. So a high and a higher high. But on the RSI, you had this high and a lower high. Ascending price, descending RSI, that's bearish divergence, okay? That's to keep it simple. And you do want to have confirmed local tops before you can start calling divergence. Otherwise, so like when we were here and you were looking for potential bearish divergence up here, yes, you did have a lower high, but if price continued up, you could have seen the RSI continue up as well. It wasn't until this was confirmed a local top where price came back down that you could confirm this as bearish divergence. Okay, so that is your RSI and stochastic momentum oscillators.